Good evening, traders. Looking at the euro dollar here. In tonight's video, I'm gonna dig a bit deeper on how we can use the high time frame order flow to get a intraday bias. I'm also gonna go through how we can identify and classify our swings forming in the market. But the boring stuff first, right? Remember, this is not any sort of financial advice, and you should not make actions based on what I say in this video. So I'm gonna start off with asking you two simple questions. Do we wanna sell below old lows or above old highs? That's question number one. Question number two is this market or specific time frame bearish or bullish? Well, to me, this time frame looks very bearish. And we obviously wanna sell above old highs, right? Based on the information the chart shows us here, we can identify some important stuff going on. So I'm gonna show you that. Price is creating a low here, a short-term low. Coming up from here, trades aggressively lower, creating a fair value gap. Then what? Price is creating a low, drawing back up into the range from this low to this high. So this high here becomes a intermediate term high. Remember from the mentorship, old highs rebalancing and old imbalance immediately gonna become an intermediate term high. How can that be useful to us? Well, if this market gonna stay bearish, I don't expect this high to be attacked. This high should hold price from going up. So when price created this high here, what happened next? It trades aggressively lower again, attacking this old sell side pool here, leaving what? A fair value gap. So based on this time frame, I want to be a seller in a premium. But how can we use that on the lower time frames? Well, let's dig into the daily time frame. Alright, so we are looking at the daily time frame here, and this is the lines or levels we have identified from the weekly time frame. Right now, price is inside here, so we are inside a weekly range. This high here represents the previous week's high, and this low here represents the previous week's low. We also know the space between this line here and this line here is a weekly fair value gap. So if this market gonna stay bearish, which I think that we're gonna reach up into this region before we are going to trade lower. But before we do that, I want to talk a little bit about what's happening in the price action down here. If you watch my previous video on the difference between a liquidity purge and revert and a liquidity sweep and a pullback to continue, it's a little bit of the same case here actually. Price is trading below this old low here, which is a sell side pool. So sell side liquidity has been swept here, but after it has done that, it doesn't really do any energetic price run higher. It's just, drawing back up into this range from this high to this low. So in my opinion, we're gonna see a continuation here. But also remember this, price is in a consolidation here. It's consolidating inside the weekly range. So if this market wanna go lower, I as a market maker will potentially trigger in this low here. Remember, This is not just a random or low here, it triggers in the weekly time frame traders, and they probably gonna have their stop loss above the weekly candle high, which is here. So if this is a consolidation, it's gonna trigger in the shorts and punish their stop loss to go lower again. So how the hell is this gonna be useful information for us as intraday traders? Well, if you are familiar with the ICT mentorship, you know we can identify specific swings in the market. So I will look at this piece of price action like this. We have a lot of things going on in this range here, right? First of all, we can identify we are inside the previous week's range from this high to this low here. So we're pretty much range bound here. We also know from the weekly time frame this is a sell side imbalance, right, between this high and this low. This is a weekly sell side imbalance. So if price is trading inside this large range and want to continue on the high time frames lower, shouldn't we trigger in the shorts prior to going lower? And what do I mean by that? Well, I see this as a large range. We're between here and here. So if I want to get a bearish bias on this market, I want price to trigger in this old low here, which gonna give me potentially a bullish bias until we reach up into this region here. Because weekly time frame traders tends to have their stop loss above the high of the candle printed. So if price trades above or below this old low here, we are down in a very deep discount. So just because price is reaching up down into this region down here, I don't want to be a buyer immediately. I want to confirm it with market structure and see a market structure break that gives me a bullish bias. And we also know from the mentorship we can identify specific swings in the market. So this range here maybe doesn't look like much if you're not familiar with identifying price swings. We can just start from this week here. What I see is price trading up above this old high here. So we have a buy side sweep, a swing low formed here, 3 candles formation here, breaks down, coming back up to rebalance this fair value gap here. We know that this high is an intermediate term high because it has rebalance, old imbalance, and after that price sold off hard, broke below this low here, which is a intermediate term low. Intermediate term low, why? Because we have a short-term low here and we have a short-term low here. So this is a more, let's say, stronger market structure break to me. Coming up, rebalancing, I think this is a 4-hour imbalance or something. This high here should be a long-term high. To me, it depends on which time frame you're looking at. Long-term highs, for me, gonna come from the high time frame that you're looking on. That's the point with a long-term high for me or a long-term low. It depends on which time frame you look at. A long-term high for me on this 2-hour chart could be a daily high rebalancing old imbalance. So how can we use this to be intraday traders? Well, this is a range, so if you don't like trading inside ranges, so just wait for price to break out on each side and see if you get a reversal pattern. I hope this video helped you a little bit on how we can break down the markets. Let me know if you want a video on some specific topics, and well, see you next time.